Welcome to this earnings special edition on Bloomberg Quint Live. We're in conversation with Vinay, the Managing Director and CEO at LIC Housing Finance, to understand what led to the muted growth trends during the quarter and what lies ahead for LIC Housing Finance. Thank you very much for joining us, Mr. Shah. If you could tell us what the prepayment rate was during the quarter and what is the competitive intensity currently like in the home loan segment?
Prepayments during the quarter were in fact slightly lower than our usual share of 10 to 11%. It would be around 9.5–10%. Overall scenario, growth and all is picking up, and especially in some of the geographies of the country. North, especially UP, Uttaranchal is doing very well. East, West Bengal, Bihar, Jharkhand, Orissa is doing very well. Andhra Pradesh, Telangana, Bhopal, Chhattisgarh, these geographies are doing very well.
So is it fair to assume that growth in the retail home loan segment will continue to remain within the 14 to 15% sort of a range?
Yeah, in fact, internally we are targeting higher growth rates, but we expect that it should continue at the same level.
Okay, but home loan, the loan book growth will continue to be driven by the non-housing loans then?
Yeah, but the portfolio growth, the main constituent is retail only. The developer book also growth looks better because the base is low.
So what were the incremental spreads like during the quarter given the benefit of the back book, and how do you expect spreads to move from here onwards then?
Spreads have been under pressure, but we are nearly the same percentages as we were in Q4. As you know, the of late cost of borrowings have gone up. We also had a couple of rate hikes. We have increased our prime lending rates. We did two rate hikes in Q1, and the third one we have already done in August, though its effect will come from October. So the spreads are under pressure, but I don't see any decrease of spreads going ahead.
So the gross NPA ratio has moved up from 0.78% to 1.21% in this quarter. What would you attribute this big rise to?
See, traditionally, if we see the NPA numbers in Q1, historically they rise. In fact, last year they had gone up by more than, volume-wise, they had gone up by about 110–112%. Current year also they have gone up by about 90%. But still we are after our recovery teams because our company is not accustomed to any level of GNPA above 1%. We have put in a cell at the corporate level to see that these numbers come down.
All right, so by when do you expect to take or bring down the GNPA ratio to sub 1% levels?
Improvement should come in starting Q2, and our earnest effort would be to bring it down to 1%.
So what about the pending resolution in the corporate loan book? Did any of your major corporate loans slip into NPAs during the quarter?
This quarter, no major portfolio. This project loan has gone into NPA. In fact, Q1 we had a long pending resolution, whereby we were able to make a recovery of not only the principal amount, but nearly full interest amount has also come to us.
So is inorganic growth a part of your growth strategy, especially since one of your PSU bank-owned housing finance peers is up for sale?
We have not given that a consideration at this point of time.
All right, Mr. Shah, thank you very much for speaking with Bloomberg Quint. We appreciate your time. That was the management of LIC Housing Finance saying they want to bring down the gross NPA ratios to sub 1% and that spreads will continue to remain around the current levels. Thanks for watching.